Hong Kong, big news from Hong Kong and China. I've got the Hang Seng Index here. This is the Hong Kong stock exchange index, and they've just put in their worst red candlestick day since 2015, apparently. Although this looks pretty big too, but this is over 2 days. And so, yeah, huge news out of Hong Kong was that China just declared that Hong Kong is no longer Hong Kong. China's taken Hong Kong back, sort of. So here's what's going on. China did a big political stunt uh, yesterday, and I mean they rolled through. People were picketing, and people have been protesting in Hong Kong for the last year and a half or so, and so China just declared it illegal for people to protest, illegal for people to support democracy in Hong Kong, and declared that they're basically going to be taking Hong Kong back now. And so they rolled in kind of with a show. And this has been a big political back and forth between Hong Kong and China. And Hong Kong's supported by Britain and the U.S. and Australia. And so we'll see how the U.S. responds. I haven't seen a U.S. response to this yet, but Australia has given Hong Kong verbal support for what that's worth. Um, and so China has basically just said any kind of activity that is supporting the democracy movement in Hong Kong is now illegal, and they're going to arrest people for doing that. And so they put on a big show. They rolled in with the SWAT team, the military police, shields up, flashbangs. It looks like a crazy riot scene, and nobody was killed. They arrested a couple people, and so there's big news, that they're arresting people now for protesting in Hong Kong. And so China has passed a law in mainland China saying that Hong Kong is no longer the whatever it was, the two, the one state, two systems, or whatever they call it, where it's like a Western banking economy inside of China. And this is no surprise. Like China, um, I lived in Thailand last year, and this was all going on back then. It started getting crazy over a year ago. And I have friends that went to Hong Kong last year to visit friends, and they asked me to go with them. I was like, no way, man. I have no interest in going to Hong Kong right now. Like, this thing could get crazy at any point. Like, I saw this kind of stuff coming, a year and a half ago, and Hong Kong's been on my do not travel list since way before yesterday. I can tell you that much. Um, but yeah, so I mean, the basic situation. Excuse me. It's cold, man. I'm in South Africa right now. I did a safari. I have my rhino here, and it's cold. It's wintertime down here, and and I don't have any warm clothes. Like, I came from the Philippines. I just have like swim shorts and like island clothes with me. I mean, and all the stores are closed. Anyway, Hong Kong is has yeah. I mean, China's taken Hong Kong back now, and they're not done doing it, but they're doing it. They just did it, and so they're violating the agreement they had with Britain that said that it was going to be the two system thing, with the democratic zone inside of China. And now mainland China has declared it illegal to support democracy, to protest, do anything sort of democratic. And they're talking about now passing a law to extradite people, kind of whoever they want, back to mainland China. So that could include business people or any kind of anyone they suspect is a supporter of, the democratic Hong Kong movement. They can extradite them to China. They can extradite travelers, business people back to mainland China. And so they're moving forward with taking Hong Kong back pretty aggressively right now. And I thought they were going to do that. I thought they were going to do that a year ago. I'm really surprised it took this long. They were getting ready to do that already. And so, I mean, Hong Kong, like back when they made the agreement, China wasn't a world power, and Hong Kong was a huge part of the Chinese GDP for a long time. I mean, I think the Hong Kong was like 20% of China's GDP at one point, and now it's closer to like 2%. And it's foreign government inside of China, so I mean they're just getting tired of it, and they just want to take it back in. But it's a huge deal on the international political stage, and so China's next target is Taiwan, and they've already declared Taiwan to be not an international or not an independent. They don't even recognize Taiwan as an entity. China does not, and so yeah. So I mean, this is the Western banking world's kind of political influence around and inside of Chinese borders, basically. And China's in a position to take their territory back on their own border, and they just did it. And I don't think anyone's going to do anything about it. Um, I would like to hear what we hear from Trump or whatever on this issue, but they're probably going to be like, "Oh yeah, pro democracy, good job," and send zero military support or anything like that. That's what I would expect happens right here, and this was about to happen. As far as the yeah, it's financially it's really complicated though, because Hong Kong is really like it's the entry point to all the dollar loans really in China. Like that is the U.S. dollar sort of banking center where all these Chinese dollar loans originate, and China is one of the biggest, has um, the most amount of dollar loans of anyone on Earth. So it's a really complicated thing um, politically, but this is obviously not good for the Hong Kong stock market, and we'll see how this affects. Let me flip over to the S&P and show. So we get here what Jan Feb here, yeah. So see this crash looks just like our crash. It really looks a whole lot. You know what? It looks like the XLF. Let me jump over to XLF and show you. The American financials look a whole lot like Hong Kong. Where am I? 20 here. No. Wait. Where am I? March. So, wait, what? September 19 to March. Something's wrong with this chart. Let me just go to the S&P. And you can see the HSI versus the S&P. It's the same general shape. You have this credit contraction down, and Hong Kong's basically just a banking, kind of territory, I guess. I don't know what you want to call it. And so it looks a whole lot like the financial. Let me pause this and try to get the XLF. Yeah, here's the XLF. I just switched to a daily chart. So you can see the shape of the American financials here versus the Hang Seng here, which is it's the same shape. Well, minus this Chinese invasion candlestick here, and so yeah, so that's what China's doing. They're kind of reeling back in their territory, basically, that they say is their territory, and now, yeah, that's what's going on now. So this is escalating. This is the dollar wars, the trade wars, the oil wars, all the international politics stuff is kind of just playing out kind of as expected. I mean, this Hong Kong thing, China's just gotten China's over the Hong Kong thing. Like they're just gonna, they're kind of tap dancing around it a little bit. But this is really straightforward. I mean, they just came out and said like, no, like we're just gonna arrest anyone that's even like supporting the opposition movement in Hong Kong now. And so yeah, I'm gonna keep Hong Kong on my do not travel list for now, and I would expect this to be uglier, even uglier next week. like I mean, that's not the end of Hong Kong. Like today, I mean, they're going to come back, and the opposition movement is going to do, rally back, and we're going to hear from we're going to hear from the U.S. and from Britain, and Australia has already said like they support, the democracy movement. But I mean, China has their military there now, and they're imposing Chinese law on Hong Kong now, and they're just going to increase doing that. And I don't see a whole lot I don't see a whole lot of opposition that's going to stop that from happening right now. So yeah, that's a look at Hong Kong, and I don't know if that news is going to affect our stock market. I mean, I think that this move is probably not related to the S&P, but yeah, it'll be interesting. It'll be interesting to see the reactions, kind of that the like the Democratic Party in Hong Kong comes back with, and how the kind of the Western world responds. Um, See if there's any kind of military mentions or anything this week over it, or if people are just like, "Yay, pro democracy," and do nothing about it. That's what I expect to happen. And yeah, and then Taiwan is the next thing. So China basically politely asked Taiwan to just sort of join China, and Taiwan said no, and so that sort of it takes the peaceful option off the table, I guess, with regards to Taiwan. I don't know what we'll see how this unfolds, but the extradition thing that China is talking about, they're thinking like maybe 6 months out or something. They're going to try to implement the extradition thing in Hong Kong. So this is just going to be, this is going to be a bunch of drama like this whole year about Hong Kong, and it's been like this for over a year already. Um, so this isn't resolved. I mean, we're gonna get a reaction from the other side here, but I would expect in the next year or two for this to kind of be resolved, and that the two system, capitalist and communist system inside of Hong Kong at the same time, is going to just be over. And Hong Kong's just not valuable to China, like in GDP purposes, and it's basically just exterior government political, you know, control, like right in their borders. And so they're in a position to just uh, to end that right now, and that's what they're going to do. And so that's the Hong Kong news, and this is the Hang Seng Index. Is scary. Oh, this is going to get even uglier. And so, man, yeah, crazy, crazy. And I guess I may as well jump around to S&P and talk about dollars and stuff. So yeah, I don't know. I don't really have any kind of trading plan relative to China. It's just too crazy. I looked at that Luck and Coffee video this past week, and I was just mentioning how, like, when you have like a company in China that's listed on the U.S. exchanges, and the accounting between country to country, like the accounting laws are kind of fuzzy, and they're getting like they were cooking the books, and they're getting investigated, and they froze the stock and all that kind of stuff. But this is a whole nother level of political risk on something like Luck and Coffee, where China, I mean, China could just cut, like, America could withdraw their stock, backing to any like stocks, like either side, America or China could just like cut off, something like Luck and Coffee, and any kind of companies between America and China are just a hugely risky thing right now. I mean, I would not touch Luck and Coffee with like a 10-foot pole, and it's not even trading yet, but just for example. And then the S&P is doing its thing. We're just kind of getting this kind of arcing pattern here, and it looks like it's around the top of the arc. And so, we have this long-term moving average just above as bear market resistance. It's pretty hard for bear markets to get above that average. But the bulls, if looking to get into a bull market, would want to get up above that thing and forget about it. And the bear, the moving average kind of contains bear markets to the downside, and it sort of contains bull markets to the upside. But you get a couple breaks across from time to time. But this does definitely look like a bear market to me. I mean, we had a 12-year bull market, and then this gash, and then just getting underneath the moving average here and kind of rolling. This is a credit contraction cycle in a bear market, and I guess I can look at some targets here on the S&P since we're here. And I guess the momentum to look at here daily, it's in bull territory up here, and it's just kind of stalling out up in bull territory. It's hard to tell what direction it's trying to go right now. It just kind of ended on like a little up move, just kind of stalling out. Yeah, like as you switch through the hourlies, it's bullish, neutral, a little bearish. So it's just kind of on the hourly charts. It's just kind of neutralizing up here. And we're at a high point. And so, I mean, well, looking at like the 45-minute or something doesn't matter at all. We have, a 3-day weekend here. And so this credit contraction cycle that we're in here does not take a 3-day weekend, though. And so where the market opens 3 days from now could be kind of crazy, because we're kind of coming to a spot where, I mean, for the bulls, like the bulls would be looking for this to be a bull pennant, big move up. And we have this, we're above kind of resistance. We're here. And this kind of activity has been really bearish on the MACD, because it went way bullish on this move up, and just all of this activity around the edge. And you can see how the activity has been along the top edge, been along the bottom edge, on the top edge. And it's not just near the edge, it's the angle of the circle at that point too. So I pointed out here a few times that this is the first time we had sort of downhill activity. But it looks like this thing is turning over now, and we're up here. And so for bear targets, man, it's a 40. The weekend, it makes it so tricky. Like I would, we have this really hot trend line here, and so there's a good chance for like a back test of a trend line if you go bearish. And yeah, so I mean, I'll just say like there's a good chance of a back test, and then the bear target would just be get down back to the inner circle. That's what we've been doing, just kind of going from the up to the outside in, whatever. And so the bear target would be around down here somewhere on this circle, and then we're kind of running out of time on the circle. And so I don't know if we would get a little action on the circle and then get back out to the edge or out here or something like that. That's the kind of bear moves to kind of look for is, do we kind of back test this thing? Do we get back down to the circle, or what? Or what do we do? We just stay on this yellow line, we get outside the circle or something. But the most likely bear target is a back test and get down to that line as a bear target. And I don't know how fast. Well, it probably would be faster than expected, because the 3-day weekend. So like the next, like it just jumps here. The next candlestick's going to be, well, I guess we'll get some nighttime something on the 24th, right? So we should be able to see some kind of activity on the 24th. But the next day of trading is the 25th, and it could be a move. And I was going to point out some other stuff, just kind of relative to this, where this line is. This is our 12-year bull market line that supports the whole bull market from the financial crisis to here. And we've broken underneath this thing. And so this is a big bearish thing too that happens on the backside of a bubble, where you break a bull market line, and then you back test it and get off of it. And once you back test it, that line's gone. Like you're going down the backside of the bubble, and bubbles can have multiple bull market lines supporting them, and this one does. This has this 2-year line from the 2018, the Volmageddon bottom, and it has this 12-year line from the financial crisis, and then way down here, around 12, there's really the floor of the whole everything bubble. Goes back to 1982. That's where the everything bubble started. It was 1982, and that's like the Volcker bottom. And so the entire .com and the housing bubble was like halfway up the everything bubble, and those are smaller bubbles on the way up here. But this reversal is the everything bubble, the whole everything bubble popping and reversing down. And so I'm expecting, movement down. The downward target over whatever it might be, a couple years or something, is down here at this line. And for a bubble reversal, once you get down here, that's not clear. If you start a new like high bull market line, kind of like we did after the Great Depression, we kind of reversed out into a high line, or like Japan tested their bottom line on the Nikkei bubble, and then they went under it in a long bear market, like 20-year bear market. And sometimes you stick on the line, sometimes whatever. When you get down there, we'll worry about that later. But that's a bubble unwinding downward target, sort of long term, as far as unwinding the bubble goes. And yeah, let me circle some gaps. And I've been wiggling this yellow line around a little bit, because a little bit of movement on this line doesn't really change all the reactions. So a little bit of movement on this line doesn't change all the reactions over like the 12-year. Like a little bit of wiggle looks about the same on the bull market line, but it makes a big difference on the action here. And so what I've been looking at here is these gaps. So we're getting a bunch of gaps, and they're really interesting for trying to place this line. And so, I mean, we just got some good reactions here, but we get this gapping move here, and there's sort of a gap down move here. There's a gap here. There's a gap move here, 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 and here. And so these are all gap moves all around this line. And so that is that just makes me like placing the line right here through all these gap moves, because you're kind of getting from the bottom edge and gapping, and getting up to the top edge and gapping and getting down. And so it makes that look like a really kind of hot area. And I think the 3-day weekend might mess all that up, as far as kind of seeing if we, I don't know, did like a gap move back down, because we did this gap up here. But yeah, I don't know. We just have to see what we get when this market opens back up, because that's a lot of time to pass. And this credit contraction cycle, if they close the market for 2 weeks or something, it would pick back up wherever this cycle is. And a 3-day weekend doesn't freeze the trading right here. Like, the businesses continue to have to pay their debts over this period of time, employees and everything. The time passes and the cycle continues. And so that's why you see a bunch of gaps over the weekend, like this gap here. Like, this isn't a gap. It looks like a gap down, but it's not. That's just a weekend. I know it's just a weekend during a down movement, and so you just get a gap down, but it's not a real gap. So every time that you look at gaps on the chart, you got to see if it's a weekend, and if it's just kind of weekend movement. So here, I mean, we had the weekend here too, and it didn't move that much. And this gap up was during a day trading session, so that's a real gap. And I didn't actually check all these to see if they happened during the day, but yeah, these are all legit gaps. They're not weekends. So that's one thing to keep in mind. Like gaps kind of point out hot areas and usually kind of reverse back and forth across them. And we have this gap here, which would indicate at some point that we might move back down, uh, across the gap and fill it. But oh yeah, we'll have to see what we get. Um, and so let's look at a few things that are really interesting. Well, the XLF I showed you already was down. I mean, it's the same kind of. I'll just look at it again. But the chart was messed up. It was weird. But it's the same kind of pattern here. Oh yeah, yeah. I can't look at it on the hourly chart. It just like gaps from September last year to this month. But it works on the daily, right? I think so. Yeah, it does. That's weird. Okay, so you can see that the XLF it dove a little bit deeper than the S&P, and it didn't quite bounce as high. And so this is bearish. This is super bearish for the financials to be bearish, and along with uh, the interest rate futures pricing in negative interest rates, this is all really bearish. And there's no indication that we're switching into a bull market fundamentally. I mean, we see Warren Buffett selling his bank stocks. I mean, selling the airlines is one thing because, the travel and tourism industry doesn't look very good in this current situation, but selling banks, that is like, what is he doing selling his banks? Like, I mean, is he forecasting like a different banking system where the current banks just aren't important anymore, or are the current banks are just going to be in a world of trouble with negative interest rates or something like that? Um, but that's a huge, huge signal to me. Warren Buffett selling banks as like, wow, what is he like? What does he see coming that he wants to sell like his number one favorite thing? I mean, his main thing is the primary banks, and he's selling his primary banks. Um, so that's crazy. And then, yeah, let's look at QQQ. QQQ has been going nuts. It's been way, way up. It's almost to all-time highs. Yeah. And I want to take a look at here, right? This is the Volmageddon bottom. Let's get a little trend line going and see if there's something that makes sense here. Yeah, it looks like here and kind of here, something like that. So when I'm drawing the bull market trend lines, I like to find these bear trap shapes, these W's that break the trend line, and I like to draw the trend line where the top of the W it gets action on top and the downward parts get below, and that gives you a good way to draw a bull market trend line. And so, I mean, we've gone up and broken above even this bull market line. Like this is just the 2018 line. So as we saw in the S&P, like we had a super long-term line like this on the S&P that was like the whole 12-year bull market line off the financial crisis. And so we've broken these and we're all the way back up here. Like this is crazy. So I don't know if that's helpful to help like try to project something else on the general market. I mean, it's just so hot. It's just way up. And Tesla's a huge stock on the industrials. Like, let's look at Tesla. So Tesla has been kind of crazy. I mean, it did this crazy swing up and way down, and we're kind of in this, this kind of shape. And Tesla has hit top resistance here, here, and this is before the crash, and this is before the crash. The crash didn't come till like over here somewhere. So Tesla did two of its own little parabolic touches up here on this trend line, and then it did the shape of the crash. And then on the reversal where everything else went, just kind of in here somewhere, Tesla gapped up huge, and has been doing this kind of crazy shape. It did a little swing, and it looks like a little ascending triangle here. So this looks super dangerous for Tesla, and Tesla is a big indicator in that whole sector, in that sort of the industrial tech sector. And so it'll be interesting to see if Tesla can get up here above all this stuff and get out of this wedge, or if it gets back in here, does it like kind of stay to the top, or does it go like crazy like this kind of thing? So it'll be really interesting to see how Tesla kind of reacts to the general market. If we get a down move in the general market, what does Tesla do? And I think that's a really interesting one. And I think as far as a call or a put, like if you think Tesla's going to go, it looks like Tesla's going to move vertically from here, is what it looks like to me. Like either just blast up or just blast down from here. Because this is a huge resistance point, and it's just wedging and coiling up in here, and just right into the point. I mean, it looks like it's going to explode one direction or the other. So that's a good spot for a call or a put option, where you can just bet on a big vertical movement, basically by getting, buying a put for a down move or buying a call for an up move. And it's, yeah, super dramatic, like 4 nights before we see what this thing is going to do, the long weekend. And Tesla's a good one to look at, maybe, maybe, because it sort of represents that whole kind of sector. And let's look at gold and silver. And so we're in a credit contraction cycle, so gold should be doing well, and it has been doing pretty well. And where did we start here? 2020. Yeah, so yeah, gold bounced on the first kind of the dead cat move here, and it pulls down when the market pulls down, but I mean it didn't drop in half. It dropped whatever. I don't know what that is, like 10% or something. And it got a really good bounce out of here, and it's kind of just been stalled out. Like it reacted to the down move really hard, and then it just kind of stalled out as the bull market just kind of drug on. Gold is kind of just dragging on along with it, and not really much indication of anything going on here. And gold doesn't look like, I don't really see any indication of which way this would move from here. It just seems like it's kind of chilling out here, and a big down move, like a big down move, usually will pull gold down with it, because you got to sell gold on margin call if if all the stop losses start getting busted and people have to cover, margins. Like they usually sell their gold positions to cover those margins, so it gets pulled down, but it rebounds really well in these credit contraction cycles. And then silver is a really interesting one to look at. Oh, and also the GLD. This is not investment advice, any of this stuff. And hit the like button and check out my playlists and stuff like that. The GLD, I don't touch that thing, man. I touch like the physical gold trust. The GLD is, oh man, Hong Kong. Oh man, yeah, HSBC is an international bank that's the custodian of the GLD, and they're a huge bank in Hong Kong. I didn't even think about that. I just think that the international banks right now are in an international monetary system contraction, and the international banks are at a big risk right now. And man, yeah, the GLD custodian is a Hong Kong bank, and the gold is all in England. It's like Bank of England has the gold, and HSBC has like contracts on Bank of England's gold, and then resells different like contracts for the GLD. It's a couple steps removed from from the investor of GLD actually having any access to the gold. And there's a bunch of questions over how much gold they actually have behind all the contracts they're trading. Um, Man, counterparty risk, political risk, structural risk. That GLD scares me. But this Sprott Physical, this is vaulted in Canada, and it's a one-to-one contracts for the physical gold in Canada. And so Sprott Physical is this is the gold that I trade in trading accounts. Uh, and then SLV, the custodian, is JP Morgan, which is probably okay. And there's the PSLV for the Sprott Silver. And I think both of those are probably fine. I don't think there's a bunch of risk. I don't know which one of those would have more risk. I think JP Morgan has all the gold themselves, and they're the custodian. And they have like over 50% of the world's monetary silver. I said gold, yeah. Silver, we're doing silver. JP Morgan has all the silver. Um, and they've kind of been losing money accumulating all of that silver, but they have like more than half of the world's monetary silver vaulted, and it's pretty crazy, man. They have just a monstrous pile of silver, JP Morgan, and that's the SLV, is the JP Morgan silver. And so silver did something super weird here, and I think this looks dangerous. And silver did a little fake blast up leading into the crash here. And a contraction cycle is not awesome for silver because it's a deflationary cycle, which means commodities are going down, and silver is a commodity. It's a monetary metal, but it's mostly a commodity sector. And for silver to jump like this would either indicate that we're switching into like inflation and silver is going to be in a really good environment, or it's doing another sort of death hook uh, parabolic reversal into a drop here. And so this is the only thing, I guess, out of like the interest rates look like they're going down. That's a deflationary signal, but silver is going up, so that could be an inflationary signal. And so, man, yeah, a big jump and a weird one, and it looks suspicious to me. Looking at silver, let's look at the VIX. The VIX has been doing some interesting stuff. Let's get in tighter on this thing. Check it out. So the VIX has, I want better than that, like 15 minutes so we can see this thing. All right. No, wait, there's a big cut. Okay. Yeah, so the VIX is just oh, that's why it's like just on today or something. Yeah. So back here, the VIX was super choppy and really high. And so you can see where a normal trading level is on the VIX. A bull market VIX, is going to be down here around 15 or something. If it gets up to 20, that's kind of risky territory in a bull market. You can trade, 10 or 15 or something is kind of normal. And this is risky. And you can see here, Feb 20, it just gapped up. Like when we started that turnover, the VIX just gapped up. And it hasn't gotten anywhere close to that gap now. I mean, that gap's at 22, right? And you see the VIX getting more volatile itself. And so this is sort of a fear indicator of how dangerous the market is. Like the higher the VIX is, it's more volatility, which means the moves up and down are going to be bigger moves in the stock market. Instead of kind of sideways movements, they're going to be more vertical movements the higher this is. But when you see choppiness in the VIX itself, that is vol of vol, the volatility of volatility. And that just indicates high risk in the market and means that the stocks aren't safe. And yeah, we're still up here at 30, well above the safety level for sure. And we started getting more choppiness in the VIX here, and that was on that big down move. And so this looks like a little bit more risk because we were getting kind of decreasing, going down, and kind of chilling out here. And we get a big pop and we get more volatility here. And then we put in a higher bottom on the VIX. So This isn't really giving anything away. We've been kind of trending down, pop trending down. And so, we could get another little trending down thing here. And so if it trends down here lower, it looks like it's trending down now. Um, that would be a bullish kind of market chilling out kind of thing. Or if we did actually put in a higher bottom here and it goes up from here, that would be a very bearish look, especially if it starts getting choppier and going up. That would be very bearish. And so bullish would be getting less choppy and going down, and more bearish would be more choppy and going up. And it's not really giving it away right now, but this does look like higher risk than what was coming here. It was just kind of chilling out and going down, and now this pop it gets more choppy, and so more choppy and potentially a higher bottom. So I see a little bit of risk in the VIX there. And what else? What else can we look at? Anything? Oh, Bitcoin's in an interesting spot here. Let's go to like the dailies, I guess. So Bitcoin has been in this kind of wedge since the big Bitcoin kind of parabolic peak. So it gets like parabolic peaks that kind of break this thing. And I've thrown the trend line kind of on the meat of I like to do this with my trend lines, is chop the peaks off and throw it on the grinding action. And there's no kind of like W bottoms on Bitcoin, but it still is good for trend lines to be on the actual action and not on the parabolic stuff. Most people are putting trend lines like on the tips of these peaks, and that's not reliable because sometimes you get a parabolic peak and sometimes you just get the grinding kind of action. And it's more important to just get the grinding action. And so, I mean, as a general trend line, we're kind of on the upper edge of this range here. And we've done this consolidation move, and we got a gap here. This looks dangerous. A gap and kind of a consolidation could be a top. It's up here. And so just sort of the range that Bitcoin has been trading in, it looks dangerous to a move down to the bottom side. Not necessarily like immediately down like that, but whatever. It looks like it could come back down, and everyone's all excited about the halving and thinks Bitcoin's going to go to the moon. And so yeah, this could be a bull pennant shape, and pop up. And if it does pop out here like that high after a big consolidation, then that would probably be the end of this kind of consolidation zone. But this to me doesn't look like the shape where you would break the consolidation zone. Like for breaking the consolidation zone, like we get a tap here, we get a touch here. I would expect you usually bounce off of the wrong side of a consolidation zone before you do kind of like a wedge reversal. And usually you get two taps at the end on the wrong side. And so I think it's a lot more likely that Bitcoin actually comes down here to this side of the zone, and then it could stay in here longer. But as a launching pad, like I think this is a good first kind of spot to look for a launching pad for Bitcoin. And we have a lot of time for it to just mess around in this zone before it really has to pick a direction. And so I'm a little bit more bearish on this Bitcoin chart. And I mean, fundamentally, who knows, man? You can't really do fundamentals on Bitcoin. It's just nuts. So that's kind of a look at just at the chart of Bitcoin. I know everybody's like saying halving and it's going to go crazy and stuff, but it just seems hypey and overbought as well. And I guess we could it's kind of up at a top and it's aiming down now. I mean, that's kind of like a bearish move in bull territory, and this looks like it's trying to go up a little bit. It doesn't look like it knows what it wants to do right now. It looks like it's trying to come up a little bit, but it's in bear territory here. Yeah, so this grinding action across the top has put Bitcoin into bear territory on the shorter charts, just like the kind of grinding action on the S&P has put the S&P down um, down farther. I mean, it was up in bull territory, and it's just kind of come down to neutral in the S&P, and just kind of blah. So yeah, this is a tough weekend. We're not really getting any kind of signal what's going on, but we get this consolidation zone. And is this like a topping reversal pattern? Because we have this gap, or or is this a bit of a pin it out? But it looks like it wants to make a big move soon to me. And as we've seen in this credit contraction cycle, like everything's been moving together. Bitcoin moved down with everything else, and it looks to me like Bitcoin is behaving more like silver than gold, meaning that it's just kind of like a weak monetary asset that people will just sell off to cover their other losses. And so this is what we did during the crash. Bitcoin was up when everything was up here, and it crashed when everything else crashed. And it did this similar kind of jump that Tesla did here. So once we got into kind of bull market positive area where people felt comfortable again, Tesla and Bitcoin did a big jump up here, a big gapping jump. And I think those look suspicious. I don't really trust this as like a bull market breakout for all the obvious reasons, all the financials and all the interest rates and all the long-term trendline indicators, and obviously the biggest gash you've ever had in the freaking history of the stock market is usually kind of bearish. It doesn't usually reverse immediately out into some insanely big bull market. That usually takes at least a 3-month cycle just to reverse directions. We haven't even finished the cycle yet, but it looks more to me like it looks like the backside of a bubble to me, where we should be getting really cautious and really paying attention to the interest rates to see if this looks like a kind of inflationary situation or deflationary. Um, as Hong Kong becomes part of China again, and as the dollar goes into question, China has been, well, all the central banks for since 2008 have been kind of just saying the dollar system's not working, and it's kind of obvious that things are broken now. Um, so yeah, I think it was like 2 weeks ago the Bank of China was saying that the dollar system's not working and that people are going to have to default on the debt, which sounds scary, but that's usually what happens kind of at the end of a sovereign debt bubble. It goes up to the top, and then when it reverses down, oh yeah, Bitcoin we get to actually watch, and it's not doing anything interesting. It's just hanging out up here. So actually, as far as trying to get like a heads up on the S&P, Bitcoin can be pretty interesting. If we see Bitcoin make a big move, it could be an indicator. Well, not that big of a move, but it could be an indicator of kind of what to expect on the S&P coming into opening a couple days from now. And so that's a look at a bunch of charts. I think that probably will do it. This is not investment advice, and happy trading.